Hello, advanced financial planning students. Hope everybody had a good week and weekend. Perhaps some of you get a break on Monday with the holiday. I do. I'm in academia, so that kind of makes it nice. So wrap up week 2 if you need to do any additional forum posts and get your homework posted. But otherwise, we keep moving along. And this week you have readings from chapters 4 through 7. A lot of these chapters look a little bit about portfolio theory and things that you've probably seen in finance before, such as cash flow statements, balance sheets, pro formas. Remember again, a lot of what you did in corporate finance can be applied to personal finance. And when you look at especially this initial chapter, in chapter 4, it talks about kind of the rock stars of finance, if you will. Many of these are Nobel Prize winning economists, such as Becker, Modigliani, and Markowitz, that discuss these different theories about portfolio behavior. And the goal again, is that how is you or advising someone, maximizing someone's assets. And assets can include human assets, like human capital, your knowledge. You all going to school right now, you're trying to improve yourselves to improve future cash flows and have a better way of critical thinking about making decisions. But I find it interesting, with especially the utility piece of it, as some of the things that our authors mention or kind of discuss in the portfolio theory is that essentially you should die broke, but probably many of us would like to maybe give some to our, say our children someday. That might be a little bit more in estate planning, but it's kind of how do I balance out all this income, be realistic about what my income is, and make decisions about assets and about what I purchase to maximize my level of happiness over a long period of time. As the textbook says in the beginning, we'll probably have, some debt that we take on from student loans and house, mortgage, but eventually, those savings start to exceed those liabilities, and we're building up our net worth. And that should be one of the things, at the very minimum you get out of this class, is a way to measure how am I doing? What is happening to our net worth, and how are we managing our cash flows? Or are we living within our means, and are we meeting realistic financial goals? And that's what a financial planner would do too, is sit down with an individual, collect information, help them project out for many years, and say this is what would be realistic for you, and these are maybe some things that we can change to try to maximize those assets. So Chapter 4 begins the foundation for this week, talks a little bit about the different theories, and then you can get into the later chapters. Chapter 5 and 6 should be a little bit of a review for corporate finance, in the sense that it talks about balance sheets, it talks about the cash flow statement, and even the authors suggest that the cash flow statement should be one more that's functional. Those things looking at operating activities, those that raise capital, those from financing. So it really helps break down and identify where your cash flows are going and how is this going to benefit you in the long run. And then, again, towards the end there with some of these later chapters, it does mention such things, as bankruptcy and trying to avoid that. For personal finance, there's chapter 7 and chapter 13. Chapter 7 becoming very rare these days that you can use it. Chapter 13 is usually some way that you have to work your way out of the debt and figure out a solution. But hopefully if there's good personal financial planning, that would be unheard of that we have bankruptcy, but it doesn't mean that things can't happen in life. So these are things we have to consider. But towards the end there, I kind of want to make sure the last thing they discuss is debt, and we all utilize debt, most of us to some degree. But they talk about the different forms of debt. This could be anything from a car payment to a mortgage. Right now, the nice thing is that interest rates are relatively low. Now, we do know at some point they're going to start rising, and that could be a concern, especially if you have adjustable rate mortgage or some type of debt that's based on an index. So it's a kind of a what-if scenario, and these are something you have to kind of plan for in case it does happen. Is it time to switch to something that's a fixed rate to lock yourself in, to know exactly what those cash flows are? Well, that was it for this week. Just kind of give you a little bit more insight. Put a forum discussion out there where I want you to kind of tell me a little bit about what type of way that you all track your finances with a balance sheet, cash flow statement projected, Personally, I have something projected out to age 95. That's just for me, and it definitely can change, but it really gives me a clear picture about future needs. And I know a common theme for many of you this past week in the forums discussion was all about wanting to buy a house. And really what you should be doing too is do pro forma statements that says, okay, if we get this type of house, what are the utilities expected? What are the taxes expected? What are the maintenance? And that needs to be included in forecast and what your expenses are going to be for that particular house. And it really gives you a good idea that is this a house that I can afford? What are the potential what ifs, and when am I going to have some serious negative cash flows come out for maybe kids going to college or other expenses, and how do we plan for that? It might mean that we have to leverage ourselves for a little bit. Leverage means borrowing. As long as we're using the debt for good reasons, how does this benefit our assets? That's okay. If you're using a lot of debt to go to WW SmackDown every week, maybe it's not the best use of debt. So how does this improve our situation? How does it improve our potential better living of standard? And that's kind of one of the goals. It says in the text, how can I maximize my living standard and do it evenly over a long period of time so that we don't have these huge ups and downs? And that's a big part of the personal financial planning. So, all right, well, do send me an email if you have any questions. I'll look forward to talking online. But otherwise, have a great week, and we'll talk to you later.